The crypto market has never been this big. But is it about to collapse? Bitcoin has broken past $100,000, institutional giants are all in, and a pro-crypto president now sits in the White House. The market is on fire, fortunes are being made overnight, and it feels like the golden age of crypto has finally arrived. But what if this is just an illusion? What if we are walking blindly into the biggest crypto bubble in history? Every major crash begins with euphoria. Every financial bubble looks unstoppable until it suddenly bursts. Could this be the peak, or is there still room for massive gains? In this video, we break it all down. Are the bullish catalysts real, or are they hiding a dangerous reality? What lessons from past bubbles can help us predict what comes next? How can you protect your investments and make the right moves? Get ready, because what you are about to hear could change the way you invest in crypto forever.
The crypto market has been on a wild ride, and 2024 was nothing short of historic. Bitcoin finally broke the elusive $100,000 mark, institutional adoption skyrocketed, and regulatory battles seemed to lean in favor of the industry. The world watched as a pro-crypto president took office in the US, and major corporations continued adding BTC to their balance sheets. With such bullish momentum, it's tempting to believe that the only way is up. But what if all these euphoric signals are masking a dangerous reality? Could we be sleepwalking into a massive crypto bubble? Understanding market cycles and identifying speculative manias is crucial for any investor. Let's take a step back and evaluate whether the crypto market is headed for a sustained bull run or an inevitable crash. The signs of a market bubble. To determine if we're in a bubble, we must first define what a bubble actually is. Traditionally, a financial bubble occurs when an asset's price rises far beyond its fundamental value due to excessive speculation. This irrational exuberance drives prices to unsustainable levels before a sharp correction brings them crashing down. Several famous bubbles throughout history offer lessons that apply to crypto. The dot-com bubble of the late 1990s saw internet stocks soar as investors believed tech companies would revolutionize everything overnight. While that belief wasn't entirely wrong, the hype far outpaced actual adoption, leading to a brutal market collapse. More recently, the 2008 financial crisis stemmed from excessive speculation in real estate, fueled by unsustainable lending practices. Crypto, by nature, is a volatile and speculative market. Every few years, we witness massive rallies followed by painful crashes. The key question is whether this time is different or if history is repeating itself. Bullish catalysts. Are they justified? There are several reasons why the current bull market seems legitimate. First, institutional adoption has reached unprecedented levels. Spot Bitcoin ETFs have amassed billions in BTC, and major corporations like MicroStrategy continue doubling down on their holdings. Even governments are beginning to discuss Bitcoin reserves as a strategic asset, with Russia leveraging BTC for international trade. Additionally, regulatory clarity has improved. The U.S. Securities and Exchange Commission, SEC, is under new leadership, and legal battles against crypto firms are being resolved in favor of the industry. This marks a stark contrast to previous years when regulators were seen as hostile towards digital assets. Unlike previous bull runs driven by retail speculation, this cycle is seeing more structured investment from traditional finance. BlackRock, Fidelity, and other financial giants are actively engaging with the crypto space, lending further credibility to the market. The other side. Are we ignoring the risks? Despite these bullish narratives, there are signs that should make investors cautious. Sentiment in the market is overwhelmingly optimistic, which historically has been a warning sign. The phrase, "this time is different," has been used in every major market bubble, from the dot-com era to the 2008 housing crisis. When the crowd unanimously believes that prices will keep rising, it's often a precursor to a downturn. Another concern is the rapid growth of leverage in the market. As Bitcoin's price surged past $100,000, we saw increased speculative trading using borrowed funds. Leverage amplifies both gains and losses, meaning that if the market turns, liquidations could lead to a cascading crash. Additionally, the explosion of meme coins and low-value projects resembles previous speculative bubbles. Many investors are pouring money into assets with little to no utility, simply hoping for quick profits. This kind of behavior mirrors past bubbles where excessive speculation led to unsustainable valuations. What can investors do? If crypto is indeed in a bubble, timing the top is nearly impossible. However, there are steps investors can take to protect themselves. 1. Diversify. Avoid putting all your capital into speculative assets. 1. A balanced portfolio reduces risk. 2. Secure profits. Take partial profits when the market is euphoric. 2. Even in a prolonged bull run, corrections are inevitable. 3. Stay informed. Follow macroeconomic trends and market sentiment. 3. Rising interest rates, regulatory changes, or geopolitical shifts can impact the crypto market. 4. Watch for market cycles. Crypto operates in cycles. 4. Recognizing patterns from past bull and bear markets can help in making informed decisions. Final verdict: bubble or bull market? So, is crypto in a bubble? The answer is complex. On one hand, there are strong fundamentals supporting this rally, with institutional adoption and increasing use cases for blockchain technology. On the other hand, market sentiment is euphoric, and signs of speculative excess are becoming more apparent. While Bitcoin at $100,000 doesn't necessarily mean we're in a bubble, if we see BTC surging past $200,000 in 2025 without corresponding fundamental growth, it could be a major warning sign. For now, investors should remain cautiously optimistic, embracing the potential of crypto while staying aware of the risks. At WinCoin, we'll continue monitoring the market, providing insights, and helping you navigate the ever-evolving world of digital assets. Stay tuned for more analysis, and remember, bull runs are exciting, but risk management is key to long-term success.